before I peace out, there are some couple things I want to check. First one is from Automatic Jack. He posted something about Active Blizzard's earnings call. Let's see.
All right. Hey, what's going on, guys? It's Jack.
Good.
Back again to talk about a bit of a different topic, but still within the realm of what we know, Activision Blizzard. But today I wanted to start talking about it more of an investor point of view. I graduated with a finance degree in college and then never really used it that much. So
yeah, I want to know what like if I was an investor in Blizzard, I would be like, holy fuck, get out of this mess, right? But that's not happening. I don't think there's like a huge drop. Although maybe it is. I don't know. Let's see.
Talk about where the company is at the moment and what has been driving a lot of the price action for the company and some of my positions and some of the action that I'm taking as my own investor into the company. All right. First and foremost, don't make any plays or any moves or any financial decisions and everything based on this video. It's just for fun, for education. Do your own research before you invest. You know the stuff. All right. So since February of this year, Activision has lost almost half of its share price. You're going up from 103 now into the 60s there, which has been pretty tremendous downturn for the company since they've been bouncing back ever since Morhaime left the company back in 2018. We can see back.
I mean, he's taking the Mike Morhaime left here and it went down. Holy moly.
Back at the later part of 2018, Morhaime left the company, leading to a downturn, followed by a poor earnings report, and of course, lest we forget, the Don't You Guys Have Phones BlizzCon, where the share price continued to fall even further. It stayed down into this range from the end of 2018 well into 2019 before.
What the fuck? I didn't expect there to be this big of a difference, honestly. I didn't notice. I don't know if you guys did. In the last 2 years, it like doubled its price. Wow. Even more, actually.
Before it began to recover.
What the fuck?
And one of the biggest things that investors are looking at is not so much the monthly active users, but they're looking at the expectations of future growth for the company. And that is what's going to drive share price growth and development, all right? Because a lot of big investors are not super gamers like us. And we will also go over some of the biggest holders of Activision Blizzard, which can also be influencing the decisions that they're making, right? It's like we talked about. Expectations of future growth drive share price. Now, let's also start talking about the lawsuit, all right? Back in July 20th of this year is when the lawsuit hit Blizzard. But you'll notice that the share price didn't really react quickly. In fact, it was still at around the 90s. Keep in mind, we're at the high 66 right now. It was still in the 90s when the news of the first lawsuit by California hit the company. And it actually stayed there for a couple of days. Now, notably, that Monday is when the share price began to collapse, right?
But I guess if this whole thing didn't happen, it would be going down, which is why it's not going fully down. It's going like, okay, Activision is carrying the Blizzard part. Okay.
80 to 84. And even further down back into the high 70s. Okay. The actual driver of this share price reduction began with the walkout, the Activision Blizzard walkout. Once employees got together over the latter part of that week and into the weekend and decided to organize a walkout, that is actually what led to share price collapsing. Employees not working.
Makes sense.
They're not making future games. They're calling for improvements to the company, which could add a lot of uncertainty. Does the company resign to their wishes and pay them more? Do they make changes in the office? They're going to be more expensive. Is there more time taken away to talk to employees during business hours that they're not working? All of these things can lead to game delays. All of these things can lead to share price reduction, profit margins being reduced, and all of that. And keep in mind, in this video, we're not going to talk about, oh, is this morally right? Is this wrong? Is whatever. We're talking about what's driving share price, what's driving the money, all right? Regardless of how we personally feel about this.
He's a businessman, dude.
With that, company began quite a downturn, which lasted a number of weeks before the share price began to recover. And then more news starts happening. There's federal lawsuit that comes out. There's securities fraud lawsuit as well. I think that's being litigated, which basically involves, hey,
By the way, very I feel like very undervalued video, yeah, chat. I think we go and support as well. If you guys want to do that? You think the video is interesting? I mean, I don't think this is interesting to everybody, but I feel like it's a good video so far.
Hey, you didn't tell the shareholders about this and you knew in advance.
Oh, okay.
That,
Don't
of course, is gonna get litigated.
don't enter video. We keep it as this. We keep it like this.
And everything
Never mind.
like that.
I didn't realize.
But now we've gone from an entirely different level. Because I mean, let's zoom
look
out
at
on
you,
the
but
chart
do
once
not go in
again.
it.
Up to that $100 a share in February. Now we're down to 60s. Okay, and this was led by the most recent earnings report. And in this earnings report, some of the notable info is monthly active users flat. Wowhead and a bunch of other news reports and everything that are in the sort of Blizzard World of Warcraft scene always talk about monthly active users because we don't really have sub numbers anymore. But keep in mind, this goes back to 2018. End of 2018. And it's remained mostly flat since that point. Monthly active users, this is about the same area, right? Monthly active users don't really care that much. Investors don't really care as much about monthly active users compared to the big old money that they're going to be bringing in, all right? And if you take a look at this, yeah, it's remained kind of flat. But when you start looking at the company from the revenue and the cash flow...
There's no way that it has been flat, all right? There's no way that this is real, right? Wait, what is the scale even? Is this like million or what? No, wait. 1,000, 100,000. Not just WoW though. Oh! Okay, so Blizzard is actually only a small part of the monthly active users. Obviously, you know, doesn't necessarily mean they make less money off of that, but they probably are. Maybe, I don't know. But again, those are all paid monthly. Anyways, okay.
It's remained kind of flat, but when you start looking at the company from their revenue and their cash flow that they're bringing in, revenue since 2016 been on the rise. Operating income, which is particularly important because you have to factor in the expenses in making this company, been on the rise. Net income, been on the rise. Constantly. Despite having a mostly flat level of monthly active users, the company has continued to grow its revenue. It has continued to be more efficient and
that sounds good, right?
Be able to generate revenue and reduce their overhead in quite a substantial way. TD Ameritrade, of course, has a lot of their stock analysis on their profit margins. Their profit margin, of course, gross profit for the trailing 12 months, that's TTM right there for you, is about in line with EA at around 72%. We're able to see gross profit margin for EA versus the industry, 72%. Again, beating a lot of other competitors there. So being able to have a much greater level of efficiency for that company is hugely important. One of the other interesting things that you may not know about is there's also a nice measure of effectiveness for the company, including revenue per employee. So the trailing 12-month total sales divided by the number of employees at the end of the reported fiscal year. It's about $1 million per employee, which I don't know if you guys knew, but that's a crazy amount of money. And again, that's not profit, that's revenue, okay? That's just money coming in. There is going to be a lot of money that goes off to overhead, and that's why we were looking previously at the profitability, all right? Because profitability is taking into account all those expenses and everything. But still, about $1 million in revenue per employee. They're looking at that effectiveness for the company, all right? So they're looking at, in particular, the company's the best at managing their owner's equity and at managing their resources, and is above average at generating resources from employees compared to other companies in the entertainment industry. Well, where are we familiar with that? Blizzard layoffs, right? Blizzard layoffs. We've heard, of course, stories of employees trying to get hired back to the company only to get offered a lower rate, and cost decreases across the board, right? We've heard stories and everything like that as well about cost cutting. And this is here as an example, how to make that company more profitable and cutting costs and cutting that overhead, right? As a result, though, the company is extraordinarily liquid, all right? Their financial strength is absolutely fantastic, okay? We even see some of the analysis from, I believe it's the Street, and their quantitative analysis ratings and everything like that.
I heard of the layoffs quite a lot, obviously, like everybody else. I also saw like at people that were my contacts in Blizzard where they got like basically told that they will have to leave the company. But and I was wondering quite a lot, like how come this is happening, right? Like, wow, it's not going that bad, Blizzard doesn't feel like Blizzard is going down. Like, why is this happening? It never crossed my mind that it is to make even more money. It never crossed my mind. I just
And
assume it's going bad.
while their gross profit margin has decreased when compared to the same period a year ago, they have grown.
It never crossed my mind that people would lay off people to make more money. I always thought you would do that if you just don't have enough money, right? Kind of weird. I guess, bro, you're pure. Yeah, you know me, boys. I'm a good guy.
Their sales and their net income, and Activision is extremely liquid. All right, their quick ratio, which clearly shows the ability, is 5.1, which clearly shows any ability to cover any short-term cash needs. They managed to increase their liquidity, cash money, and short-term securities, despite already having very strong liquidity to begin with. This would indicate improved cash flow. All right, this just means again more and more revenue going to be being brought in, and a lot of times they're not going to be spending it unless they're able to fund very reliable future growth, right? Having that cash on hand is excellent in case they have to worry about a lot of debts. And as you can see right here, their total debt for quarter three was about $3 billion.
I think there's a lot of people that work in the gaming industry because they do it out of passion, and sadly, there's a lot of people that just abuse that fact, because they are working for passion, because they enjoy what they're doing, they don't pay them. But at the same time, it is what it is. Like, that's how the market works, right? And there's more demand, and there's more people that want to work in this area. The prices for those drop. You know, I don't know if you can do anything about it, honestly. Same in arts. Yeah. Although in arts, dude, I don't know. It depends also because what people perceive as good art changes quite often as well. But yeah.
It's in the millions, of course. So it's $3.6 billion in debt. But a lot of that debt is actually fixed rate. So just like your car, you might have a car loan and it might be around 1%, something like that interest rate. Whereas a credit card is going to be like 20%. But what's notable in the financial reports is that Activision said, hey, most if not all of our total debt is actually at a fixed rate. So we're not worried about using any of our cash equivalents to go pay off this debt immediately, but a quick ratio shows can they do that if they have to? And they can, and they can do it very, very easily, right? But you might ask, well, why not take all this cash that they have on hand and start paying their employees more? Just, be nice guys and keep them around, retention. And honestly, the brutal answer is why do that when it'll reduce the earnings per share, right? The company is constantly being looked at for the earnings per share, their earnings growth, and it goes into these quantitative ratings that the Street, Cifra, Ford are all going to be putting into it. This one in particular, I believe, is starting to show some of the earnings per share growth over time. Actually, it is this one right here. So Ford Equity Research is also talking about the trailing 12-month operating earnings per share and how it's trending positively and how it's constantly trending positively. When they start talking about the expectations from their investors and everything like that, they're showing net bookings of $1.89 billion, so a 7% increase year over year, slightly beating their consensus by $1 million. Not a huge beat, but a beat nonetheless. Earnings per share, again, beating their estimates by a couple cents and everything like that. And the main issue, though, is while their current status is looking strong, their financial strength is really strong, they also are having to deal with backlash in their company from the lawsuit, from the uncertainty that those things bring, right? You might say, well, they have a ton of cash on hand.
Why is that? Wait.
Having to deal with strength is really strong. They also are having to deal with backlash in their company.
Okay, wow, he's adding them up as if they're like both a negative thing, but obviously one is a positive thing and one is a negative thing. Okay, I think.
From the lawsuit, from the uncertainty that those things bring, right? You might say, well, they have a ton of cash on hand if they have to pay out millions of dollars to California, but they don't. But the investors and the company itself don't know how much they have to pay out, and that's where the problem lies. When there are delays to games.
Well, the thing is this even like, if this company works like this, do you guys believe that it's even savable? If they, because right now the players are not happy, the workers are not happy. The only people that are happy are the the people in charge of make this money, I guess, and the investors, I guess. I guess they're happy. I mean, this was like a, you could foresee this, right? Like this isn't like a we fucked up type of thing. Then again, I don't know if the workers will ever be happy. I guess they will be happier, because otherwise this will go hit the fan, like shit will hit the fan. But I'm just not sure. Does the game have to be bad for them to make money? You know what I mean? I feel like it doesn't have to be bad. I feel like you could make good money, maybe even more money, with a better game.
Game titles, right? When there is reduced guidance, when they say we don't expect, Diablo 4 and Overwatch 2 to contribute to our 2022 earnings, that immediately starts sending the share price into.
They made more money since the game was bad, but they didn't make as much as Wrath Time, sorry?
A spiral, because what they call priced in, they had priced.
I mean, not from WoW, at least, I would assume. They do, but how? How do they make more money? It's not like what do they gain in me playing the game more, exactly? I'm still paying for the same subscription. I guess they don't need to make their own game better. Okay, in like a really like a good plan, like a really futuristic plan, you can argue that by locking you into this game and not letting you play other games, the other games don't get popular and better, which means you don't have to make your own game better, which means you can spend less money to make your own game better, which means you make more profit. But it's like a really like long-term plan, which might be the case. That is really Fivehead, actually, if they did that. Yeah. Because, people might play other games, and WoW, they will do that. Like, I play Final Fantasy. I still have my 3 subscriptions running for WoW. But maybe eventually, if Final Fantasy takes this money that they receive and reinvests into Final Fantasy, makes it even better, maybe 2 years later, I don't play WoW anymore. Why bother? Final Fantasy is so much better. Because WoW didn't spend all that money into the game. Could be true, yeah. People who don't care about quality are also in charge. Money is all that matters to these people. Support. They for sure take advantage of player loyalty. Oh, yeah. Remember, they are always doing 2 things: working on a new expansion and creating patch for the last expansion. So if they can reduce the costs or numbers of employees working on patches, they save money. Yeah, and what's the best way to, spend less time on content? Don't create content and just make instead repeatable content. True. That's like slightly different, but or harder or whatever. Like M+. M+ is a brilliant idea, I must say. It's very good. It's not even that bad,
Priced in expectations that those games would be released and would continue to provide growth to 2022. Hearing that they're not then shakes up investors' expectations, and they don't like the uncertainty at that point. So that has resulted in the share price collapsing to where it is now, as they lost almost 15% after their earnings were posted. So huge loss there, but keep in mind, share price losses are not going to be forever. As we mentioned before, there are some excellent financial strengths to the company where they're able to hold on for quite a while. They have a market cap of $53 billion, and all of these investment reports have been updating their ratings for the company, with many of them maintaining buy ratings across the board. And again, this is not just Blizzard. This is not just World of Warcraft. This is the entire company as a whole. And don't believe me, start looking what we're saying. On November 3rd, our analyst here on the side of Cifra did update his analysis, John Freeman. And he said, we keep our 101 price targets. They're saying it's a buy. We're going to list it as a strong buy on our recommendation, and keeping a $101 price target based off a solid third quarter, in line with expectations, very attractive valuation, in our view, a share is down 15% post earnings at a PE, which is a price to earnings ratio. That's how much the share price is relative to how much money they're earning, below 19 times. So a lot of companies, we can take a look as well over here, are going to look at their evaluation for their price to earnings. And a lot of companies in the industry are going to be trading much higher than where we do see Activision. We can look, for example, at EA, and they're trading at a price to earnings of 51, right? There's also the PEG ratio, the price to earnings growth, where it's almost 2 on the side of EA. And you were able to see on the side of 1.5
I don't really understand all of this,
on the side of Activision.
Yeah,
this is the price earnings growth, okay? And I think they have the official definition. It's a stock's potential value since it accounts for the company's PE and predicted growth rate. So it's calculated by dividing all this stuff. A lower ratio indicates a cheaper stock price relative to projected earnings. So they say, hey, this stock price relative to how much we think it's going to grow in the future is actually very attractively valuated. And the street has also had their valuation and everything like that they had previously. There we go. So labeling it as a massive discount. All right, trading at a significant discount to its peers. Now, there's a lot of different ratios that you're going to be able to look at, right? Right here, it's showing that relative to many other peers for the price to earnings growth, that it's about on par. But there is going to be some expectations of lowered earnings growth from what we've seen so far. And companies cannot predict the future, right? They're never going to know how many people are going to be buying their video games. They're never going to know with 100% certainty whether this Call of Duty or that Call of Duty is going to be able to make tons and tons of money. But they do have some expectations that they're going.
It's also increased time and money investment make it harder to quit, like some cost fallacy. Yeah, definitely, dude, definitely. A lot of people wouldn't know what to do without WoW. They keep falling, potentially will get them, you say. I don't even know if that would be a bad thing. I mean, I don't give a shit if they sell the company. Honestly, maybe that's better. Is WoW good or bad? WoW is definitely bad right now. It's a good game, but it's like, I view it as a good game that's like sick, yeah? Just needs to get healed, dude. Just needs to get healed, and it's good.
You're going to be able to go with. And like we saw previously, they are just about beating a number of their estimates, right? Usually what they want to do is you want to be able to set up expectations that you can steadily beat every single time. Because if you have a steady beat, the share price can, of course, appreciate, but you never want to miss for a lot of these companies, especially not for one that is Activision Blizzard in particular, because Activision Blizzard does not want to have any sort of misses whatsoever as a Fortune 500 company, as an S&P 500 company, a very, very large corporation that has some extremely, extremely large companies invested into them. Most notably, you have a couple of companies like BlackRock and Vanguard who own both 8% and 7.5% of the company, respectively. They are the largest shareholders of this company. And keep in mind, about 90% of the available float, that's the shares in circulation, are held by institutions, right? They're held by State Street. They're held by hedge funds. They're held by, Morgan Stanley, Invesco. You can check it out all out right here. These are very, very large companies with billions, if not trillions of dollars under management. And they all vote, right? And they all vote to be able to direct the company in the way that they want to. These holders of shares are the ones
I wonder how, if you hold any, after what percent of equity can you vote for changes in the game? How much money do I need to buy Blizzard? Oh, it is like $100 or something? Oh, 66. Oh, yeah. Yeah, okay, so $66. So, does that mean I can get one share and therefore be able to see every vote that they do? I'm not saying to make the decision, but to see what they are even talking about. I can just get one share and then see it. So basically, it's probably public.
Who are setting policy by voting in the board of directors. So they have enormous amounts of control. And if they don't meet the expectations of these companies, they're going to get voted out of their jobs, right? So always keep that in mind, the incentives for doing so. Okay, so with that, the expectation for a lot of these companies is, hey, It's at an attractive valuation at this point. There's still going to be elevated global engagement despite lockdowns ending. New games are going to be performance optimized for next-gen consoles, now shipping for a year, partially offset by a multi-quarter delay for Overwatch 2 and Diablo. But there is backlash risk due to a culture of pervasive sexual harassment from consumers, employees, and an increasingly socially conscious developer community, albeit likely limited to certain studios. Okay? So what they're saying is, yes, you, person watching this video, might not actually buy the next WoW expansion, might not actually buy the next game because of what's happening at Blizzard and Activision as a whole. They're also saying that the backlash could also lead to them not hiring as many developers or hiring as many talented developers because they're going to choose a different studio based off the backlash that's been received from this. So keep in mind, that can also...
So actually kind of risky also to associate yourself with Blizzard, right? Like, let's say I'm a really good developer and I get a very good offer from Blizzard. I might be like, why would I get into this bullshit mess? I just can go to some other place, right? Makes sense.
So start hurting their future growth when they're not going to have the talented developers coming into their studio specifically. But they say, hey, we think it's limited to certain studios overall. They say, all right, this is a problem, this is a risk, but because the valuation is stronger, because the company has saw its way through other delays in the past, that they're going to be tolerating it. And a lot of these companies that have been holding like millions and actually I should say billions, $6 billion worth of Activision stock, they're going to keep holding it, right? They're going to keep holding it, they're going to keep voting, and they're going to keep on having an impact on how the company is going to be run, right? Whew. So with that said, personally, my absolute bet, not based off of my personal feelings on the company or anything like that, but just the personal moves I make because money, is I actually bought the dip. I actually ended up buying what they call calls on the company for January that I think it's going to be above $70 at that point. So I bought a couple of January 22 calls.
Probably right as well. If I was into stocks, I would probably buy as well, dude. I don't see how it can become worse. It's I know you guys are gonna say copium and stuff, but it's already like really bad, the situation. Then again, this is just Blizzard. I don't know how much Blizzard even has an effect on this. I think they still make money for the short term at least. I think would I invest and hold it for 2 years? Probably not. No, unless they fix the game. If I don't see any fixes, I think right now I would buy it. Then I would wait until I see if they like if you're just talking WoW, right? Because I really don't know. Obviously, there's like so many other games. I don't even know what King was in that. There's so many active users. Maybe that's how they make their money. Is that actually declared as well? Like from which game or which studios they make like the most money or something? I don't know. That would be interesting. But I would, for right now, I would think it's gonna go up the price. I mean, in fact, let's see. It's been a day since this video is out. Can we do like Activision Blizzard stock price? It went down by $1, I think. Interesting. Very nice video though. Really like it.
What they call calls on the company for January that I think it's going to be above $70 at that point. So I bought a couple of January 22 calls at $239, and we'll see what pans out. If the share price rises above that level, I can make a bunch of money.
It was 66. Look, it went already a little bit up.
If it doesn't and it stays flat,
if it's because of the lawsuit and stuff, I think I would assume it goes back to like 80 or something. These things, they don't last that long usually. And I don't see it being like that unfixable. I feel like moves are being made. If there was no news from Blizzard still, no WoW Council, even though the WoW Council, people may be mad about it and stuff, but no signs of any work being done, then I would say, damn, it could go really bad. Really, really bad. But I do think they are back to work, basically. So.
Line, much like we saw the company stay very, very flat after, of course, its disastrous BlizzCon back in 2018, and after Morheim leaving, then I could lose it. So we'll see. If you guys are having interest in this video or anything like that, let me know down in the comments down below. But my move, basically is just built off the back of momentum. I went into it seeing how beaten up the company's stock price is, and I knew that a lot of different investors, in particular, a lot of different traders would be looking at the strong earnings growth. They'd also be looking at the stock getting beat down by 15% in the last 12 months. And they said this historical performance should lead to above average price performance in the next 1 to 3 months. And I said, hey, I'm going to be making a move based off of some of the research that I did. Again, always do your own research. Always, 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 because you can lose a lot of money in the stock market, and it is not great, okay? Don't do it. So let me know if you guys like this video. If you have any other questions or anything like that, comments down below.
Definitely a cool video.
Personally, for me, my move is I bought the dip, and I'll probably
see. I'm gonna check if you guys increase the views or not. If not, we're gonna have a fight.
a move based off of.
We had 3 viewers. This is all from our stream, confirmed. We did it, guys. Good job.